Hi, this is Claire Anhalt, and these are your self-storage market insights for February 2021. Self-storage fundamentals continue to strengthen and stabilize, especially compared to other commercial property asset types. The self-storage industry started the year strong as street rate performance improved substantially across the nation on an annual basis. In addition, development activity remained relatively stable in most markets and at the national level. These strong fundamentals are helping maintain a positive outlook for the self-storage industry as we move into a new year. However, the industry could face a tough slog in the near term, as we are on shaky economic ground until widespread vaccine adoption helps the nation begin the road to full economic recovery. Among the top markets tracked by Yardi Matrix, the Inland Empire saw the largest percent increase in street rates for standard-sized 10 by 10 non-climate controlled units in January, up 6.2% year over year. Looking at street rate performance for 10 by 10 climate controlled units, the Inland Empire also saw the largest increase in rates for 10 by 10 climate controlled units, up 9.7% year over year in January. As we saw earlier, self-storage properties under construction or in the planning stages nationwide accounted for 8.3% of existing inventory in January, marking a slight 10 basis point uptick month over month. However, the latest completions forecast still shows a slowdown in new supply completions in coming years compared to pre-COVID projections. On the other hand, if the self-storage industry continues to see such strength in street rate performance, the development community may respond quite quickly, driving development activity upward. While Boston saw a year-over-year increase in rates for 10 by 10 non-climate controlled units of 2.1%, month over month, the metro did see a decrease of 2.0% for this unit type. Throughout 2020, Boston also saw 15 storage projects abandoned from its new supply pipeline, more than any other market. While Boston does have relatively low existing inventory equal to 4.6 net rentable square feet per capita, the drop in rates month over month and pullback of some developers in the metro may signal that Boston is in a slightly overbuilt situation and may see further negative fundamental performance moving forward. Tampa has seen strong forward momentum in terms of self-storage recently. However, January showed a surprising slowdown in rate performance for the popular metro, especially compared to other top markets. Month over month, street rates for Tampa for 10 by 10 climate controlled units fell 1.5% and decreased by nearly 1.0% for non-climate controlled units of the same size. This marks the worst month over month rate performance Tampa has experienced in the last 8 months. Thanks for watching the video. What market would you like us to do a deep dive on next month? Please comment below. Thank you.